What's happening, crypto fans, and welcome back to Bitcoin Bulletin. The market is absolutely electric, moving at lightning speed, and if you blink, you might miss the next seismic shift. We've got a packed show today with updates that could redefine your crypto journey. Get ready for the must-knows, the must-sees, the absolute latest that you absolutely cannot afford to miss. Let's dive in. First up, a major development in global payments as one project is being hailed as the new Bitcoin of payments for its innovative cross-border solutions. We'll break down what this means for remittances worldwide. Then, we've got a bold prediction for Bitcoin's price target this year, with a top CEO sharing his outlook and weighing in on the future of Ethereum. Is the king of crypto heading for new all-time highs? We're also looking at who's really building the financial backbone of Bitcoin post-halving, and it might not be who you think. We're talking about the unsung heroes powering BTC-Native finance. And finally, a whirlwind recap of the week. Bitcoin's reaction to Fed news, a surprising political purchase in the digital asset space, and a stark warning about a potential market crash. Plus, an analyst calls an ideal entry point for XRP. Stay locked in, you don't want to miss a second of this. Hit that subscribe button, ring the notification bell, and let's get into it. Remittix earns coveted Bitcoin of payments title. Remittix is rapidly emerging as a significant force in the global financial landscape, earning the prestigious moniker Bitcoin of payments from prominent influencers and analysts. This distinction is not about replicating Bitcoin's core function, but about its potential to revolutionize cross-border value transfers, mirroring Bitcoin's foundational impact on digital ownership and value storage. The project's strategic positioning to tackle the colossal $19 trillion global remittances market, validated by a recent 30K audit, has propelled it into the spotlight. Analysts are particularly impressed by Remittix's robust infrastructure, which includes a mobile-first wallet, extensive multi-chain support, and real-time fiat conversion capabilities. These features directly address the practical limitations of Bitcoin in payment speed and scalability, fulfilling the original promise of seamless, borderless value movement in a more efficient manner. The true appeal of Remittix lies in its tangible utility. The platform simplifies cross-border transactions by allowing users to send cryptocurrency and have recipients receive fiat currency instantly. Unlike Bitcoin's comparatively slower settlement times, Remittix facilitates near-instantaneous transactions, making it an ideal solution for freelancers, individuals sending remittances, and everyday users seeking cost-effective and rapid payment systems. This focus on real-world application differentiates it from many speculative projects. Financially, the Remittix token RTX has demonstrated considerable momentum, trading at 0.0944 with over 602 million tokens sold and $19.7 million raised. This strong investor interest, coupled with tangible achievements like the 30K audit and a substantial giveaway event, highlights a foundation built on utility rather than mere hype. The project is also attracting attention from institutional investors and significant holders, with anticipation building for its upcoming exchange listing. This influx of capital and confidence from larger players reinforces Remittix's market position and suggests strong long-term potential. While Bitcoin remains the benchmark for digital value, its inherent limitations in transaction speed and efficiency hinder its use as a real-time payment solution. Remittix aims to bridge this gap by enabling instant crypto-to-bank transfers in over 30 countries and supporting more than 40 cryptocurrencies. This capability positions Remittix as an evolution of the Bitcoin vision, transforming the theoretical potential of digital value transfer into practical, everyday reality. Instead of chasing fleeting trends or meme-driven virality, Remittix is committed to developing a resilient infrastructure designed to meet a critical market need. Its strategy prioritizes scalability and global accessibility, aiming to serve millions of users worldwide. This dedication to fundamental utility, rather than speculative hype, is precisely why it has earned the Bitcoin of payments designation, not for its market capitalization, but for its ability to realize Bitcoin's transfer potential in practical, everyday scenarios. The project's development roadmap continues to emphasize infrastructure enhancements and user adoption. Industry analysts anticipate that Remittix's combination of multi-chain support, real-time currency conversion, and broad global reach makes it a rare digital asset that merges significant utility with burgeoning investor interest. As more users engage with the beta wallet in the coming months, the practical impact on the global remittance sector is expected to become increasingly evident. Hold on tight, because the predictions are getting even bolder. Next, we're diving into whether Bitcoin is set to hit $150,000 this year, and what that means for Ethereum. Canary CEO forecasts Bitcoin at $150K, questions Ethereum's longevity. Stephen McClurg, CEO of Canary Capital, has presented a bullish outlook for Bitcoin, predicting it could reach $150,000 by the end of the year, albeit with a caveat of a subsequent bear market in 2026. However, McClurg expressed skepticism regarding the sustainability of Ethereum's recent surge, despite its strong performance among major cryptocurrencies. This forecast arrives at a time when crypto markets are approaching record highs, fueled by substantial inflows from institutional investors into exchange-traded funds, ETFs. McClurg articulated his conviction in an interview, stating, "There's a greater than 50% chance that Bitcoin goes to the $140,000 to $150,000 range this year before we see another bear market next year." He attributed Bitcoin's rally to increasing demand driven by ETFs and a broadening base of institutional buyers, including sovereign wealth funds, pension funds, and corporate treasuries, noting, "These inflows are creating a higher price in Bitcoin." Canary Capital's strategic interests extend beyond Bitcoin, as the firm has filed ETF applications for several altcoins, including XRP, Sway, Cronus CRO, Hedera HBAR, and a meme coin associated with President Trump on Solana. Notably, Canary has not filed for an Ethereum ETF. McClurg voiced his reservations about Ethereum, characterizing it as an older technology, and highlighting that there's a lot of other protocols that are faster, cheaper to transact, and fundamentally more secure. While acknowledging Ethereum's significant growth over the past 5 years, he believes newer blockchains like Solana and Sway have surpassed it, predicting that Ethereum's momentum will wane and it will not reach new all-time highs. However, this perspective is not universally shared. Greg Magadini, director of derivatives at Amber Data, offered a counterpoint, emphasizing Ethereum's dominant developer ecosystem. Ethereum will be extremely hard to compete with despite what some call older tech, because Ethereum owns the developer ecosystem, Magadini explained. It's like the iPhone platform that enables developers to build apps directly on its infrastructure. Those network effects only compound over time. Magadini projects that Ethereum could gain on Bitcoin relative to their trading pair, potentially reaching a 7% ratio, which translates to an ETH price between $8,000 and $10,000. Despite his differing view on Ethereum, Magadini concurred with McClurg on Bitcoin's upward potential, agreeing that it could surpass $150,000 in 2025. He cited inflation hedging and a general appetite for risk among investors as key drivers. Given the combination of an equity market rally and political pressure on the Fed to cut rates while inflation remains high, we have the perfect context for higher Bitcoin prices, Magadini stated. Bitcoin moves like a mix of digital gold and a risk-on asset, and right now, both those sentiments are helping prices move higher. McClurg also commented on Litecoin's potential resurgence, drawing a parallel to silver against Bitcoin's gold. Canary Capital has also applied for a spot Litecoin ETF, with McClurg suggesting, Litecoin has the ability to process ordinals a lot faster, potentially making it suitable for smaller transactions. He also noted that crypto market seasonality could contribute to volatility, with August historically being a weaker month for risk assets, while September and October typically show strength. But who is truly laying the foundation for Bitcoin's future, beyond the price predictions? Next, we uncover the surprising role miners are playing in the financial backbone of Bitcoin post-halving. Bitcoin miners emerge as systemic stabilizers post-halving. In the wake of the April 2024 Bitcoin halving, a significant shift has occurred in the operational dynamics of Bitcoin miners. Far from being mere participants in block creation, miners have evolved into crucial systemic stabilizers, actively shaping the financial backbone of Bitcoin-native finance through sophisticated balance sheet management and strategic liquidity initiatives. This transformation positions them as pivotal players in the ongoing development and stability of the cryptocurrency's ecosystem. The halving event, which reduced the block reward for miners, traditionally presents a challenge to their profitability. However, this cycle has seen miners adapt proactively, demonstrating a remarkable capacity for financial engineering and strategic foresight. Instead of simply cutting back operations, many have focused on optimizing their energy consumption, enhancing mining efficiency, and diversifying their revenue streams. This includes exploring more direct engagement with the broader financial ecosystem, moving beyond simply selling mined Bitcoin to cover operational costs. Miners are increasingly engaging in sophisticated financial strategies, such as leveraging their Bitcoin holdings as collateral for loans or participating in DeFi protocols. These actions not only provide them with much-needed liquidity, but also inject capital and stability into the wider Bitcoin market. By managing their treasuries more strategically, miners are ensuring their continued operation and, in turn, supporting the network's security and decentralization. Furthermore, the concept of BTC-Native finance is being actively built by these miners. They are not just holding Bitcoin, they are using it as a foundational asset to create new financial instruments and services. This includes potentially facilitating liquidity for other market participants or engaging in yield-generating activities within the Bitcoin ecosystem. Their proactive approach to balance sheet management demonstrates a long-term commitment to the network, moving beyond short-term price fluctuations. The 30K audit validation mentioned in relation to Remittix highlights a broader trend of increased scrutiny and professionalization within the crypto space. While this specific news item focuses on Remittix, the underlying theme of robust infrastructure and utility is mirrored in the miners' evolution. They are building the essential infrastructure that supports Bitcoin's functionality as a store of value and a medium of exchange, often through more traditional financial mechanisms adapted for the digital asset world. The implications of miners acting as systemic stabilizers are profound. They contribute to network security not just by processing transactions, but by ensuring their own operational continuity through sound financial practices. This reduces the risk of large-scale miner capitulation, which could otherwise destabilize the network. Their strategic financial decisions are becoming as critical to Bitcoin's health as the underlying code itself. This shift represents a maturation of the mining industry, moving from a focus purely on mining rewards to a more integrated role within the digital asset economy. As these miners continue to refine their financial strategies and contribute to BTC-Native finance, they are solidifying their position as indispensable pillars of the Bitcoin ecosystem, ensuring its resilience and growth. From the bedrock of mining operations to the fluctuating tides of market sentiment, the crypto world is always buzzing. Next, we're wrapping up the week with a rapid-fire look at Bitcoin's reaction to Fed news, a surprising political purchase, and a stark warning about a potential crash. Weekly Crypto Roundup. Bitcoin reacts to Fed news, political figure buys digital collectibles, and crash warnings emerge. The past week in the cryptocurrency markets presented a dynamic mix of events, with Bitcoin experiencing a notable uptick following dovish remarks from a Federal Reserve governor regarding potential interest rate cuts. This positive sentiment for Bitcoin, however, did not broadly extend to altcoins, which saw pullbacks. In parallel, a prominent political figure made headlines for acquiring a popular digital collectible, while a noted economist issued a stark warning about a potential market-wide crash. Additionally, the U.S. Treasury confirmed its stance on Bitcoin purchases, and an analyst identified an ideal entry point for XRP. Bitcoin's ascent was closely tied to macroeconomic indicators, specifically comments from a Federal Reserve governor suggesting a more accommodative stance on interest rates. This dovish outlook typically boosts risk assets, and Bitcoin, often viewed as a leading indicator for the broader crypto market, responded positively. While this move provided a boost, many altcoins failed to mirror Bitcoin's gains, indicating a potential divergence in market sentiment or a flight to perceived safety within the crypto space. In a move that captured significant attention, former U.S. Representative Matt Gaetz announced his acquisition of Pudgy Penguins tokens, referred to as PENGU. Gaetz expressed enthusiasm for the current digital era, and his purchase was further endorsed by crypto trader Broski as a prudent long-term investment. This high-profile acquisition highlights the growing interest in digital collectibles and NFTs among various public figures, potentially signaling a broader acceptance of these assets. Amidst the market fluctuations, macroeconomist and technical analyst Henrik Zeberg issued a cautionary note, describing the cryptocurrency market as the bubble of this era and forecasting a significant crash. Such warnings, particularly from established financial analysts, often prompt investors to reassess their positions and risk exposure, adding an element of uncertainty to market outlooks. On the policy front, U.S. Treasury Secretary Scott Bessent confirmed that the government does not intend to increase its Bitcoin holdings through direct purchases. Instead, any growth in the U.S. Treasury's Bitcoin reserve will be solely through the acquisition of confiscated assets. Bessent also projected that tariff revenues might surpass earlier estimates, providing a broader fiscal context. Finally, regarding XRP, despite a recent dip in its price, an analyst suggested that this presents an ideal entry opportunity for new investors. The analyst indicated that current price levels, hovering just above a key support, offer a favorable position for accumulating XRP, anticipating a potential dip into that zone shortly. That wraps up our deep dives for today, but the conversation doesn't end here. Join us after the break for a lightning round recap of all the top stories and your essential market takeaways. And that's a wrap on today's Bitcoin Bulletin. We saw Remittix hailed as the Bitcoin of payments, a prediction of Bitcoin hitting $150K this year, miners stepping up as financial backbone builders, and a week marked by Fed reactions, political NFT buys, and crash warnings. Don't miss out on any of the action. Smash that like button, subscribe for more essential crypto insights, hit the notification bell so you're always in the loop, and drop your thoughts in the comments below. Follow us on all social platforms for real-time updates. We'll see you next time.